purpose of our session this afternoon is to try and understand why you don't pay the corporation tax, really. That's the issue that we're focusing on this afternoon. So can I start with Starbucks, Mr. Alstead? My understanding is that you filed in Companies House losses for most of the years that you've been running coffee houses in the UK. Is that right?
Yes, that's correct.
And the other thing that is odd to me is that if you've made losses in the UK over 15 years, what on earth are you doing business here?
We know that we must be in the UK to be a successful global company.
But you're losing money here. It just doesn't ring true, Mr. Alstead.
No.
That's what frustrates taxpayers in the UK. Doesn't ring true. You've got to give us a better explanation.
Mr. Alstead, my heart's begun to bleed for you. I'm going to have to rush out down Victoria Street and have a double caramel macchiato because you're in such a bad way. I mean, for 14 years of trading in this country, and you've paid what? 1.6 million in corporation tax. I mean, you're either running the business very badly or there's some fiddle going on.
You're paying on royalties in the Netherlands, aren't you? Is there a special low tax regime in the Netherlands on royalties?
Yes, there is. We have a tax ruling that we've had since
So
the
it's
opening.
less?
Oh, yes, it's a very low tax.
So there is a tax advantage to you for paying the royalties in the Netherlands?
It's a favourable tax rate that we have in the Netherlands on all income that comes in from all over the
That's
region.
why you put it into the Netherlands?
It's not why, but it is an attractive reason to be there. There's no question.
It's why.
What is
Steve?
the tax rates you pay in the Netherlands?
I'm very happy to provide that to the committee. I am bound confidentially to the Dutch government on that. Just confidential.
Confidential to whom?
The tax authority, under our Dutch ruling, they've asked us not to share that publicly.
So you have a special arrangement to allow you to pay less tax in the Netherlands?
Yes, it's a low tax ruling that we have in place.
And it's for that reason that you therefore transfer the profits from the UK, which are booked as losses in the UK, into the Netherlands.
Your chap is nodding behind.
The other thing I would also highlight, we have paid in excess of 100 million in payroll taxes in the last 5 years. We've paid tens of millions in business rates in the past 5 years. And
I've heard this argument before. Let me just kill this argument because it really makes me cross. On the one hand, so does every other business. So the community-based bookshop that you're putting out of business also pays business rates, also pays its PAYE. And the other thing is you depend on the services that come out of the tax you pay. So, you depend on the ability of your of getting your goods around. So you've got to get the roads in place. You depend on all those things. And probably worst of all, both you and Mr. Alstead employ people on probably minimum wage if we're lucky. And then we, the taxpayer, pick up the tax credit bill for that too. So we're putting a lot of money back into the people you put, and you're not putting enough tax into our economy.
The tour soon takes us to the Netherlands. Surprisingly, they are an important global hub for reducing the tax burden of multinationals. This country has the most tax treaties in the world, and this, combined with very low tax rates on intellectual property, makes 91 out of the 100 largest companies in the world want to let their revenues flow through the Netherlands.
Ongeveer 11.000 miljard euro wat elk jaar door Nederland stroomt.
How can this offshore world exist? Who maintains it? Who keeps it all running and makes sure that the inhabitants get the best advice? Who builds the financial structure and monitors the capital flows?
They are really three types of people. There are bankers, there are lawyers, and there are accountants. Together, we have called them the Pinstripe Mafia.
They sell 20 million iPads a year for about $500 retail. That's $10 billion. In China, they've been employing about 1.2 million Chinese workers, and they pay about $40 to $50 a piece for those iPads. So the iPads that they're selling for about 10 times what they're buying them from China. So China realizes about $800 million out of the $10 billion. Where does the rest of the $10 billion go? Well, they park about $2.2 billion of royalties offshore on low-tax havens. So the total gross margin on all this is about $6 billion.
How does Apple succeed in only paying 1.9% tax on its profits generated outside the US? If foreign profits were to flow back to Apple's headquarters, the company would have to pay 35% corporate income tax. So Apple prefers to direct the foreign profits to a subsidiary in Ireland, where corporate income tax is much lower, 12.5%. But before that, profits are first looped through the Netherlands, where intellectual property is subject to little or no tax. The reduced profits then pass through another Irish subsidiary and on to the British Virgin Islands, where corporate income tax is nil. Apple is considered a pioneer on this tax route, which is commonly known as double Irish with a Dutch sandwich.
You'd expect the World Bank or the IMF to take an interest in this. They have all these economists. The OECD does a lot of work on tax havens, but nobody had ever quantified the size of the offshore industry. And so...
Why is that, you think?
Well, it's a very controversial subject. I mean, the World Bank spent a lot of time studying poverty and measuring it endlessly, but they don't study inequality.
Lawyer and investigative journalist James S. Henry used to work as chief economist for the McKinsey consultancy. In his spare time, he calculated the amount of capital that is parked in the global offshore industry. A calculation that neither the IMF nor the World Bank have ever ventured to undertake. That makes Henry's very conservative estimates the first of their kind and undisputed to date.
You know, it's kind of like estimating the size of a black hole. We came up with a headline number of $21 to $32 trillion as of the year-end 2010, which is an astonishing figure. Nobody else had ever done that. The embarrassing fact is that the rich countries in the world, supposed to be the most responsible and so-called developed countries, are running this kind of shell game for the world.
At the University of Nairobi, we talked to Aitia Waris, who has investigated the effects of these often secret tax arrangements for years.
Basically, these are zones where you will go, you will build your factory, and then for 10 years maybe the government will not collect tax from you. These exist pretty much in every country in Africa right now as we speak. And what we've discovered in all the countries is that when that 10-year period ends, they close up and they move. So that's what has happened. In the Kenyan EEZs, there are no companies that last longer than 10 years. And if they have, the ownership has changed. So when the ownership changes, then the tax holiday gets extended by an additional 10 years. When companies investing, mining companies are investing in a country, they're coming because that natural resource exists in that country. It's not because of the tax. They're coming... The minerals are not going to be able to move. They're not going to take a walk across the border because you raise up your tax. But for some reason, this concept has just not penetrated into developing country governments. They still think that they have to beg multinational corporations to come into the country and then beg them to set up. But what actually happens is they take the resources and then they go. This is crazy. The whole point of a tax holiday is that you get a break for 10 years while you set up your business, you crystallize it, then you start to show profit. Then you're in the country and making profits and paying taxes. That was the point of giving you the 10-year startup. Not that you come in, invest, extract as much as you can and then leave the country. That's exploitation.
The language that is used offshore is very careful. So we will find tax minimization. We will find neutral taxation. I love the phrase that we're looking for neutral taxation. It actually means no tax, by the way. So neutral tax means no tax. But we couldn't say no tax because that seems, well, a little unseemly, doesn't it, you know?
It's not easy to measure what the actual benefits are for the tax haven itself. But for the multinational, everything revolves around reporting as little profit as possible. This can be done by transferring your software patents or intellectual property to a Dutch mailbox company. Then you arrange for your subsidiary abroad to pay royalties on it. This way you reduce the profits of the parent company. And the surprising thing is, only a very small amount of those royalty flows are subject to taxes. How much? You make secret arrangements about that with the tax authorities. Apple does it, Pfizer does it. The construction even works for a nice cup of Frappuccino.
Accountants have not been subject to the same degree of scrutiny for some time. They've had a remarkably good recession. Very few countries have paid much attention to the role of accountants in the creation of the crisis that we have around the world. I mean, just to give an example, the accounts of all the banks that failed, whether it be in France or Belgium or Switzerland or the UK or anywhere, were signed off by a Big Four firm of accountants as being true and fair. Now, why weren't those accountants criticised for signing off accounts which clearly were not true and fair because these banks were basically bust? But they've got away with it. And this stuff, by the way, is backed by the European Union, which basically means that at the end of the day, we end up with the EU passing laws written by the Big Four accountants about how the Big Four accountants should be regulated and report, with the consequence that they're not accountable to anybody.
With VAT, it is the products that you use, the food that you eat, the water that you drink sometimes has VAT on it, the Pampers that you buy for your child, even the milk powder that you're going to use to feed your baby. So VAT is paid by the end user of the product, which is you and me and everybody else. And that means